Okay, good morning. So today we're going to be learning about candles. I'm going to be telling you the 4 types of candles that you actually need the most, and the 4 types of candles which are mostly effective. So before I tell you about the candles that are more effective, let me first show you on how a candle forms. This video is actually more of beginners to know on more much on candlestick patterns that are more effective. So before I begin, let me first show you a quick recap on how candles are actually formed. Just take for instance, this is a real candle, this local candle that you know that burns. So if this is a candle, meaning it burned beginning from the upwards, right? So it burned beginning from the upwards. Let me say it began from here. So after beginning from there, it burned, leaving that wick. Then it came down, burning. As it reached here, it burned, then coming upwards, still leaving that wick. So as its anatomy or its body or its figures, we always call this a body, and we always call this a wick. So these candles always leave information that tells us on what price is actually doing. So when you see a candle that has opened from the upwards, let me say its open was up and its close is down, that's what we always term as a bearish candle. And the first example I can show you is this, meaning it opened from up and its close is down, meaning what the market is trying to tell us is that the market is going down since the opens are up and the closings are down. Then when its opening is down, and it closed from up, meaning that candle burnt going upwards, right? So if it began from down, let me say it began from here, it began burning from down, then it went up, then after it came down, so meaning it began printing from downwards, or it began burning from downwards, then it went up. And in the market language, meaning that candle is bullish, right? Because its opening is down and its closing is up. And the example I can show you is this green candles. So it shouldn't always matter the color, since everyone can put their colors whatever colors they need. So always just matter the opening. If a candle opens from up and closes from if a candle opens from down and closes from up, meaning the market, it's trying to tell you that the market is going up. So meaning that candle is called a bullish candle. So let me just try to type it here, meaning that candle is so meaning that candle is a bullish candle. Then if its opening was up and it closed from down, meaning that candle is a bearish candle. So now, what are the patterns that we actually need to know about these candles? The first pattern that I'll be going through, and the first most important pattern that's always everywhere and it's always effective, we shall first see the bearish engulfing pattern. So the bearish engulfing pattern, this is where, as you can understand, as you can hear the term engulfing in a simple analogies is where it's when something covers another thing. Let me say this is a simple box. If it's covered by this, meaning this green box has covered over this red box, right? Or let me just make this red, meaning this red box has covered over this green box, right? So if I use the Forex language, so meaning this red box has engulfed this green box. So what do we use this, or how do we use this in the market? So whenever this red box, if we now make them a candles, if we now make them candles, when this red candle covers all over this green candle, so then we shall call it an engulfing pattern. So meaning this candle has engulfed this, right? How do you see that it has engulfed it? Just looking at them, you can just use simple lines that the opening of this and the closing of this green candle is in the opening and the close of this, so it's just engulfed, it's in this red candle. So whenever you see such a pattern, meaning the market is trying to tell you now we are going down. Actually, a quick tip is that these patterns always work effectively in bigger time frames, beginning from at least 30 minutes to the higher time frames. But when you go down to the 15 minutes, going down to the 1 minute, you will find many candles that look as such, but the market is always not respecting them. So okay, this is a bearish engulfing pattern. So when you see it, meaning the market is trying to tell you that now sellers are coming in play, and most times after that you will see the market trying to sell. You will see the market trying to sell. So let me first show you an example. The first example is here. So whenever you see such a pattern, most times after that the market always sells, and people who use price action after seeing such patterns, they are always ready to sell from there. They just place, after that pattern closing, they just place a position there, they place their stop loss there, or maybe they take a 1 to 2 and they are ready to go. So after there you can use that pattern to trade. Okay, so after there you can use that pattern to trade. So okay, now which other pattern should we go through? I think there I've tried to explain that. So if you have not understood on this bearish candlestick pattern, you can come into the group, or you can comment into this video that I'll come and explain to you on how it works. So which other pattern that I am going back to? So now we have the bearish. Let's now go to the bullish engulfing pattern. So the bullish engulfing pattern is just the opposite, of which these names come from this last candle, that if this last candle is bearish, if this last candle is a bearish candle, so meaning our pattern will be called a bearish pattern. If this last candle that has engulfed the other is a bearish candle, so okay, now let me show you the examples of a bullish engulfing pattern. So the first example, let me actually look for a pair that is buying. So actually these patterns work most when you're using it in the right trend of the pair. So if the pair is buying, you should be looking these pairs, you should be looking for these patterns in a pair that is buying. If you're looking for a buying pattern, like if it's a bullish engulfing pattern, you should go looking for it in a bullish pair per now, per then. Okay, so let me see, let me look at this GBP chef and see if we have some examples there. My network is slow. Okay, now we are looking for the bullish engulfing pattern, and we want to see on what happens when a bullish engulfing pattern happens. We have the first one there. Now this green candle has engulfed the whole red candle. You see that? So after seeing that, you just enter your entry, put your stop loss below that pattern. All right, and then after target a 1 to 2, it can be even be a 1 to 3. Now let me just take, for instance, I've risked 20 to make things precise. I've risked 20 pips, which I'm seeing from here, 20 pips. Then I take it to 60, right? Just after seeing that pattern, simple things. So after now, you come here, see this pattern. It's a bullish engulfing. This candle has been engulfed by this. So you come, place your entry here. You just place your entry on. Okay, so now you just come and put your entry after that candle has been closed. Then put your stop loss below those candles, which is 40. Okay, so the 40 you target 3 times, which is, so after there you risk 40 pips to get 3 times of it, which is 120, right? Very simple things, nothing much. Okay, so now you come look for another, where is another engulfing candle. Of course, everything won't be perfect. I'm showing you that there will always be losses too. You risk that. Sometimes the stop loss is way too big, so you should always have a stop loss limit. You say, I can't risk 80 pips because the market won't move that big much in a small time where I will be able to make some money of it. Okay, so simple things just like that. As you can see, I'm also showing you that you also have losses, but since you'll be risking more than what you're losing, then you'll be able to make money. Where is another candle? We have this, that's engulfing candle. After that, risk how many? Risk 40 to get how many? 120, right? Simple things just like that. So these are the candlesticks that I'm trying to show you that are actually too helpful in the market, as long as you're trading them on the right trend. If the market is buying, look for buying patterns. If the market is selling, look for selling patterns. Simple as that. Okay, so what is the next pattern that I will be showing you? Okay, so we have the doji. So now, what does the doji do? The doji is trying to tell us something. Actually, before I talk about the doji, how does the doji print? The doji just prints just like this. Okay, it begins from here. Let me say this is the market. The market has opened from here. Then the market has opened from actually in the middle here. The market first went up, it left a wick, then it went down, then after it came back and left a wick. So if a doji prints in a trending market that's going in a bearish market that is going down, meaning it's trying to tell you that be conscious, the market is maybe soon turning, or the buyers have tried to come in play, or the sellers have tried to come in play. So it's trying to tell you that now we haven't decided, either the buyers are in play or the sellers are in play. So the next candle will always tell you what's coming next. It will always, the next candle after the doji will always show you that now we have decided, since the doji is telling you that nope, we haven't decided. So the next candle or the next two candles that will come after the doji we always tell you now we have decided, the sellers are in play. So the next two candles after the doji, if they are bullish candles, that's when you decide that now we are going to buy or we are going to sell, if the next candles are bearish, right? Okay, so let me try to show you some examples. The first doji I'm seeing is here. So after seeing that candle, after seeing that doji, then you ask yourself, it's a doji, yes. After seeing that doji, meaning the market hasn't decided, and after it actually saw another doji. So after these two dojis, you see a bearish candle. So meaning the market is trying to tell you now sellers are coming in play, right? Since you're seeing a bearish candle, since at first I already told you that a bearish candle is a candle that tries to tell you that now there are sellers in the market. When you see as a bearish candle, in this case for me I turned them red. If you see a red candle to my side, then meaning sellers are in the market. So after seeing these two dojis, you see a red candle, then after it you see another red candle. So you just know now sellers are in the market. So come on, enter at the close of the candle, put your stop loss above that candle and target a 1 to 3. Simple things. You get target a 1 to 3, take that money, right? Wait another time. So I already told you that these you always read them according to the trend they are in. If it's a selling market, and the selling and buying, it's something simple. You can see if the market is going down like that, meaning the market is selling, right? If it's going up, meaning the market is buying. If the market is trending just like here, if you see that the market is just trending just up, meaning the market is buying. So when you see a doji, it's trying to tell you that the market hasn't decided. So you always interpret it after the 2 or 3 candles that come up into the market after it has printed. Okay, let's go to another pattern. So I will talk about the hammer pin bar. So actually I will be talking about only those 4 candles. The hammer, we have talked about the engulfing pattern. We have told you about the bullish engulfing candle pattern and the bearish engulfing pattern. We have talked about the doji, and now we are talking about the hammer pin bar. So now the hammer pin bar is just a candle that it's trying to tell you something like this. Remember, you must know on how they print so that you can try to understand on what they are saying. This is how hammer pin bar prints. So hammer pin bar begins from up. It begins by buying, so it goes up. After buying, sellers come in play, they push the market way too down. After the sellers coming in the market, but still the buyers take up the candle again, right? So the market is trying to tell you that yes, sellers were available but they left, right? Then the buyers dominated the market. So in most cases, when you see such a candle, a hammer pin bar, in most cases it's trying to tell you that the market is soon reversing. Okay, so let me first look for some pin bars. We have a first pin bar here. Our first stupid there. Actually, this the first pin bar here. We have this bigger one. We have this. This is a pin bar. So meaning here it was the market was actually trying to buy. So buyers were still dominating the market. The sellers came way too much, trying to dominate the market, but buyers came into play. So what's the market trying to tell you? That yes, sellers were here, but now buyers are trying to dominate the market. Then after that, I see the market tried to buy after it sold. Okay, so we have another one here. After it printing, it shows you that yes, we have been selling, but buyers are trying to dominate the market. So after seeing that, you can place your position here, place your stop loss below here, below that candle, right? And you can place a 1 2 3. Simple things. Take that money. Okay, we have another one here. Actually, not that all of them will be working. You will always find others when they are losses, right? But don't in market, losses are inevitable. You can take the losses, but as long as you're using risk management and you're taking what you're supposed to be taking, it will always be simple. We have another one here. So you see that it's trying to tell you that yes, we were selling, but the buyers are trying to dominate the market. It's a very perfect pin bar, hammer pin bar. Place your entry here where it closes, put your stop loss below it, which is a 30, and target a 1 to 9. You see, it never reached, right? Though it tried going there. So other position will be losses. We should not be crying over losses. Just continue looking for whatever you always look for. Where is another pin bar? Where is another pin bar? So a hammer pin bar, naturally it looks like a real hammer. That's why you hear it called a hammer pin bar. As long as it has a big head with a little tail on it, so that's a hammer pin bar. We have another one here. This one looks like a perfect hammer. After seeing that, place your entry here, place your stop loss below it, which is a 30, right? Which is a 30. Then place your TP above here. So you should actually also always take your time and understand whenever a hammer pin bar happens, how many pips does the market go? Because I have seen for only the 3 entries that I have only just even tried, the market doesn't move more than 3 times its candle. It moves twice. So you always just adjust and begin risking 2 times the position. Just be creative, right? So let's try another hammer pin bar and see if it will move 3 times or 2 times the position. So as I told you, others will be losses. We see a hammer pin bar here, but the market won't reverse it, right? We see another one here, but the market won't reverse it. So you should always just know others will be losses, but as long as you're using a good risk management, market will always respect most of them. We have the 2 of them here. So after that, place your entry here, place below them, and take a 1 to 2, which it moved, right? So when you see a hammer pin bar, just know that market is going to reverse to the other side where the head is, right? But it's always not perfect, though it goes that side. Okay, so those are the 4 candles that I'll be telling you about today, and that's the 1% that you'll be learning for today. So I'll drop another video tomorrow, and you can always subscribe so that you should always not miss out on information on whatever I always drop on this channel. You can also come into my group for more insights. Thank you.